Hello everyone and welcome into the channel. My name is Brent and in today's video we're going to be diving into the latest stock trends including the S&P 500, Dow Jones, the Nasdaq, as well as the recent Federal Reserve updates and some other news on the markets this week. Okay, so if you are brand new, definitely go down below, subscribe, hit that like button. And if you do find this video content valuable, let me a comment, drop me a comment down below, say hello. And with that said, let's go ahead and get started. So I do want to go ahead and really quickly check out the Fear and Greed Index. Right now, we're still remaining pretty strong at 22, although it has came off those lows of around 16, 17. I do fear, I do feel like there's less fear right now in the market. So we might see this tick up a bit. I think the Fed kind of put everyone in a good position, and we'll kind of discuss that a little bit. So I asked everybody to kind of put their bets in as far as where they believe the S&P 500 and the market overall will move this week. A lot of people believed, well, we had 7 votes. So if you guys do see my polls out there, definitely drop a poll, drop a response there. Of the responses, we had 86% believing that the market will bounce higher and trend up. We had no one voting that it'll kind of more downside come in. A lot of investors don't believe there's any sort of downside. Fed came out saying that, hey, we're not dropping rates, which is actually good indication that the market is fine and stable and there's not a lot of worry there, right? They're not bringing interest rates down in order to pump money into the market, make it cheaper. So that's kind of a good indicator that they don't believe that there's anything negative in the market at the moment. Yes, there's uncertainty, but that's with what's happening right now with tariffs, right? And a few other investors out there believe that we're going to trend sideways. And I kind of believe that too. I did expect a little bit of a rebound this week. Even in my last video, I kind of said, I believe that right now during the week, we might even see a 0% change throughout the week where we're just kind of sloshing in this range. And that's what I'd like to see. I don't want to see us quite recovering yet because I do believe that there's still some issues with some of the Magnificent Seven, which we'll go ahead and cover. But a lot of the rest of the S&P 500 is actually doing really well, and we'll kind of touch up on that. I did ask the question right now, as from highs to lows, we are still down 7.83% in order to make it back up to those highs, and we would need to go up roughly 8.49%. And I kind of did a breakdown there asking if anybody had invested any sort of capital during this down market. And it looks like the majority of people have been buying during the down market, myself included. And then jumping over into FinViz. So Thursday is usually has been a negative day in the past few weeks. Monday this week actually really surprised me, popping up very positively after having a really nice to the green side on Friday. Monday opening very positive and gapped up. That had to be filled. So Thursday is kind of refilling that gap that took place between the weekend. So we had Monday being very positive. Let's see, I go ahead and bring it up here for the 5-day trend here. So yeah, we closed on Friday right here, opened up, gapped up on Monday by that 0.5%. Throughout the day, we did drop throughout the early morning of Monday before popping up pretty high off those lows. During the day, intraday, it went up nearly 1% before coming back down very sharply on Tuesday, filling that gap up that took place on Monday, and then kind of has been slowly trending to the upside throughout the week. But if we can see here from Friday into the current week, we're up for the past 4 days, we're up 0.45%, which is what I've expected. It's just to kind of trend slowly sideways until there's something in the market to either push us to the downside or push us to the upside. Right now, there's uncertainty, so that is still being decided there in the market. As far as the 1 day goes, we can see out there Broadcom is the most red out there, down 2.57 for the day. The other positions, Tesla, just kind of not making a negative, right? Tesla's been hit multiple times in the negative. Today is just kind of finding its bottoming out point, I believe, going up slightly at 0.17. Amazon, Apple, Google, Microsoft kind of in that same boat. Very little to the upside, but we did see some consumer defensive industrials beginning to kind of bring down that the day had been kind of moving a little bit more positive, but pulled back into the red throughout the day. Here we can kind of check out that one day early in the morning. We did see the market actually up for the day over 1% before pulling back down throughout the rest of the day, right? The Fed really pushed the market up after their chat yesterday. The market went up nearly 1.5% from that midday to the top of the day, a little over 1%. And then all that positive sentiment just kind of left the market here on Thursday. Now, I do want to go ahead and bring up a few little areas that took place on Thursday. Thursday, we had weekly jobless claims edge up to 223,000. There was another area down here where they're going to rebench it. So right now, Fed's not making any changes. They want to benchmark the S&P 500 index rallying. That happened on Wednesday after the Fed announcement that they want to keep rates unchanged, and that's expected. There was no rate change due to around June, July of 2025, and I believe I kind of pointed it out in here. So anything that I mark in yellow, I feel like is it's not positive or negative, it's just news. Here we had the jobless claims. I believe it's kind of negative news, so I kind of marked it in red. And then economic data on Thursday showed weekly initial jobless claims increased slightly last week, although outlook may be dimming due to government spending cuts, interest rate levels, and policy uncertainty. And then here, market participants are pricing in a 63 basis points of cuts from the Fed this year, with 71% odds of a cut of at least 25 basis points at the June meeting. So that's just a few months away now. Here we are in March. In June, 3 months away as that meeting takes place. They're believing that Fed cut could take place. If that gets pushed out and the market's kind of pricing that in, anytime the market prices on a rate cut and it either gets pushed out or it gets knocked from 2 to 1 expectancy, that's usually a negative thing in the market. But we don't have anything to believe that they're not going to cut rates more than 2 times this year so far. So that's kind of the news there. A little bit more as far as the U.S. jobless claims rise marginally. We can see claims have been bouncing in the middle of their 203,000 and 242,000 range of this year, with layoffs generally staying low and hiring having begun to cool. The government and the court filings this week acknowledged that nearly 25,000 recently hired workers had been fired. So that kind of pushes into that unemployment number where we have the normal unemployment number, but then also 25,000 federal government employees also that had been recently hired were also fired in that time frame and are probably getting unemployment. Here, just kind of a little note about the Fed, just keeping interest rates the same. So Jerome Powell did make a nod of uncertainty swirling around the economy and just the tariffs and such, right? And yeah, U.S. central bank policymakers, however, indicated that they still anticipate reduced borrowing costs by 0.5% point by this year. So that's still expecting 2 rate cuts of 0.5%, one in June and the other either in September or even like November timeframe of 2025. So that's some of the news there. Other news here I wanted to kind of chatter about. Yeah, this is kind of the same. I kind of had a couple articles up kind of reading through here, but this kind of comes along with the same thing. Fed cuts, remain, 2 rate cuts are expected. Rates are currently unchanged at 4.5. Declining consumer sentiment in the recent slowdown of growth could trigger the Fed to cut interest rates sooner, but inflation is still stubbornly above that 2% target. So right now, yeah, Fed wants inflation around 2%. I believe inflation is currently about 2.5. So it's projected to grow to 2.8 this year, up from its 2.5 predicted by the end of last year. Central bankers expect inflation to fall in 2026 and 2027, but Powell added that these predictions were highly uncertain. I thought inflation came in recently around 2.8. Maybe it was 3.1. I don't know. It came in lower than expected, which was good recently. Now, I want to kind of talk a little bit about the Magnificent Seven. how they are currently kind of equity wise, how they're how much of a percentage they take place within the S&P 500, and how much of those individual companies are affecting the S&P 500 and the market right now. So, really quickly, according to the most commonly used classification system, there are 11 stock market sectors. At the time of this writing, there's 9 of those sectors that are beating the S&P 500. So 9 out of the 11 total sectors within the S&P 500 are currently positive year to date. You may be wondering how that is possible given that the S&P 500 is one of the most well-known stock market index. The S&P 500 represents the most valuable US companies, but in some ways it doesn't represent the broader stock market well. So I thought this was a pretty good article. It really breaks down just how much of a disparity there is within the S&P 500. So here we have the Magnificent Seven, including a few extras. So we have NVIDIA, Apple, Microsoft, Amazon, Google, Meta platforms, which is Facebook, Broadcom, Tesla, and Netflix. So those 10 or so companies, that makes up 32.6% of the S&P 500. Every single one of these companies falls into technology, consumer discretionary, or communication sectors. So that's 3 sectors out of the 11, which compromises already 52% of the S&P 500. So that while the technology alone makes up 30.7, the other consumer discretionary communication sectors make up that other 20%. So those few little sectors alone make up 50% of the S&P 500. So many of these stocks are currently underperforming the S&P 500 year to date. In fact, Amazon, Apple, Microsoft, NVIDIA, and Tesla are negative year to date, which is dragging the S&P 500 down. And we kind of talked about this in the past, how we saw that these companies were all breaking below their 200-day moving average, and that they would have a very hard time here in the short term keeping above that 200-day. I said to kind of watch out, be careful, because if these companies here break below, it's going to mean much more downside for the S&P 500. And that's kind of what took place, right? We did see a bit of a drop off once we broke below the 200-day moving average, which we assumed would happen. We quickly saw the S&P kind of fall all the way down, breaking just slightly below the 200-day. Wait, no, not the 200-day. 10%. Yeah, 10% into correction territory. So I'm just kind of pulling this up on my other screen real quick, and then we'll kind of chat about it here in just a second. Here we can see on the board that the S&P 500 year to date, the SPX level percent change is positive by 1.25. But if we break the individual sectors, or not the individual companies out of the S&P 500, we can see how they are negative year to date. Apple is down 1.33%. Let me just go ahead and verify that real quick. I'm just have it up on my other screen here. I just want to total return level percent, and I just want year to date. Where's the date? This shows negative 14.5. Well, that can't be right. So take a quick. Maybe it is right. Let me go pull up, not silver. I want to go look at Apple year to date. 12.2. Okay, so it is a lot further down. These are not accurate. This is shown from February 25th. Okay, yep, that makes more sense. So this was prior to the fall. They were already negative year to date by a bit, and then they've even gone even further. Okay, so now that we have this right here, let me go ahead and bring in the current numbers here. So there's our price, Apple, Amazon. Let me go ahead and check all these up. And then all I have right now is the percentage normalized percent change year to date. So here on this prior picture, we can see that the only position that had been positive on February 25th was the S&P 500, positive by 1.25%. But we did kind of see it breaking down and it was beginning to break down because it was getting pulled down by the Magnificent Seven. Tesla at that time had been down 25.03%. Here we are on March 21st as I'm recording this right now. The Apple is down 14.5%. So I remember seeing this one, just slightly down. I'm saying, hey, this one could have some downwards momentum if it does break below. And guess what? It did. It actually got hit much harder than I expected, down 14.5%. I did end up, I don't have Meta in here. That's the one I'm missing. Yeah, I did end up selling out of my Apple position and buying into Meta after a bit, right around the same percentage point. They were down roughly 5 or 6% when I sold off all my Apple and moved it over to Meta. And yeah, so Meta year to date is down no, they're not even down year to date. They're still positive to year to date by 0.08. We see second down year to date is Microsoft, down 8.22. Orange, Amazon is down 11.14% for the year. Followed right behind them is Nvidia, down 11.74%. Then we have Apple having been hit for a whopping 14.5%. And then at the very bottom, with a whole bunch of things going on with the company, CEO and the news, right? It's down 41.5%, up from those lows of around 46%. So they are definitely getting a bit of a beat down. If we take a look at these companies here in the short term, kind of looking at their 200-day, 50-day kind of momentum, we did see some death cross kind of taking shape in one of our videos of it like 2 weeks earlier. We did see that there were some death cross indicators. If the short term, the 50-day moving average crosses below that 200-day threshold, that's usually a death cross. That's usually a negative indicator, meaning that the company could go down even further. So let me go ahead. Yeah, death cross pattern is when a short-term moving average drops below its longer-term moving averages. And it's not like a terrible sign. Sometimes nothing ever happens. Here we have that golden cross where that showed indications the stock should go higher. But if we take a look at history over the past 10 years, when these little instances have occurred here, we had that 50 go underneath that 200-day, and it didn't break down a whole lot, but it did run up before falling back down below its prior low. Here it almost took place once again, but we did have it here. Death cross took place. It dropped down, but it quickly recovered here mid 2024 into those highs here of 2025. So we'll kind of see what takes place here with Apple in the next few months. I think it's going to be an interesting couple, like the next 2 months in the market right now are going to be very volatile. We could see the market drop an additional 10%, or we could see the market make some sort of a trend sideways. It's kind of an interesting time. I honestly don't know. I think we'll see more volatility for sure, but I just don't know if we'll go down or up. Amazon doesn't seem to be in a terrible position. We can see they have traded below both the 200-day and 50-day moving averages, but their price average is still well above, and they kind of fell to a standing point here, which kind of seems like a floor. I don't see them falling much more. I don't see them dropping into the 160s unless something terrible happens news-wise that really pushes, negative there. Microsoft, we already see they have that death cross took place right here back in February, March timeframe. Let me go ahead and just bring up the 1 month here. This will kind of show us a little bit better. Nope, got to go 3 month here. Yep, death cross took place here going into March. So end of February, death cross took place. It's been on the downtrend. There's no indication that this is going to stop. You can see that Microsoft is currently trading at its 52-week lowish area. And if we look at the 5-year period for Microsoft, it's down right now at 2024 levels. But if it doesn't stabilize here around 386, it could fall even as low as mid 2023s, just slightly around $320, $330. We don't know, but we do see that death cross take place. And there has been times here, you can see a death cross taking place right here, where it trended quite a bit lower. You can see dropping down, touching that 2021 low. So Microsoft could be in a pickle going forward. NVIDIA, there's a little article kind of talking about death cross within NVIDIA taking place here in the short term. Let me go ahead and pull up this article because this is one that I didn't see. But here, short term, we just saw that death cross take place. Okay, so let me go ahead and bring this article over here. So the death cross is back for both NVIDIA stock and the Russell 2000. Russell 2000's having a hard time. A lot of those companies are not profitable, right? They're smaller, mid-sized companies with tariffs affecting them a lot more than the tech and bigger S&P 500, large companies. So the bearish death cross pattern has just appeared in the charts of the Russell 2000 and for the first time in 17 months. NVIDIA stock for the first time in 3 years. So this pattern is when the 50-day crosses below the 200-day, as we kind of discussed earlier. Yeah, so for NVIDIA, its first death cross was back in April 20th, 2022. The stock tumbled another 47.7% before it bottomed 6 months later at that 2-year low. So that is pretty interesting. We'll see what happens, right? I'm kind of interested in NVIDIA. If you guys are out there invested in NVIDIA, are you also kind of watching for that to kind of take place? If this will kind of deteriorate and fall off a cliff, let's go ahead and take a look at Tesla. Short term, they still got quite a bit to go, but they do seem to have found a bottoming out point right around this $230 point. We did say in a past video, we could see Tesla dropping anywhere between $220 to that $200 range at the time. That's kind of what's been going on, but we don't know. It found this bottoming out point. It seems to be kind of stable at this point. As the 50-day trends closer and closer to the 200-day, this could be more of a negative, bearish sign, and Tesla could continue to fall from there. Meta, probably one of the more positive companies within the Magnificent Seven, and currently, one of the bigger tech companies. This one is still kind of holding its head high, keeping above that 200-day moving average really well at 586, and it still has a little bit to go before it touches that 200-day, but it's a pretty strong company. There's not a lot of negative news that has been affecting this one from what I've seen. So this is just market conditions and just kind of fear in the market that's caused the position to kind of fall down and just kind of creates a buying opportunity for investors out there. We can see the death crosses. They are good indicators of a market, or not a market, but a position specifically. Any stock that does have that death cross take place, it generally is a sign that the company will go down a further percent. So, for example, we've seen that, I think it was Microsoft. Yeah, Microsoft. So Microsoft, we could see this one chop down to 320 here over the next few months. I don't know. I think that is it as far as, I don't think I have anything other thing highlighted here. The other things we kind of wanted to chat about, I know I got into discussion here with the year-to-dates on the companies here. So this kind of looks at the individual sectors of the S&P 500. So there's 11 sectors. These are broken up into their spider ETFs. If you guys look into these individually, you can see their ticker symbols here. IXV tracks the healthcare portion of the S&P 500. As explained earlier, we saw that 9 out of the 11 sectors within the S&P 500 were positive at the time. So February 25th, 9 of them were positive in comparison to the 11 total. I'm going to go ahead and quickly see if I can punch these in to Y chart, Y chart real quick, and then I'll go ahead and take a look at them as well to see where they are at right now. So right here on February 25th, they had actually been, I think I may have missed one. What have we got right now? IXE and IXI. And now we need SPX, IXT, and IXY. Okay, so now I got them added in here. We go ahead and bring them over. All we're gonna do here is look at the price in percent and year to date. Okay, so now we can see this is not showing. I may have got the wrong one. Yeah, like this one right here doesn't exist in there. Yeah, I may not have copied a few of these correctly over. Like Singapore, I don't think that's one of them. I'm just gonna go ahead and remove a few of these. Yeah, they're not even showing up the correct way. Get rid of price and do total return level. And that might show it better. Okay. Let's see if I can bring these other ones in, and there we go. Okay, so here we are, March 21st, 2025. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's some sector out there that I don't have added in here, but you can still, you can see here, the S&P 500, these are kind of spider ETFs. They're kind of broken up. A lot of them are still positive year to date. The only one that's negative here is that discretionary select sector, down 12.30%. So this could be that very tech heavy one. I think had been mentioned in this article here that the consumer discretionary and communications, it, falls within having a good amount of the Magnificent Seven and a few others that are kind of negatively impacting the market. Yeah, so like Amazon and Tesla comprise 40% of the Vanguard consumer discretionary. So right there, as we just said, that consumer discretionary is 40% with Amazon and Tesla. So here, consumer discretionary, Tesla and Amazon are going to negatively impact that one quite a bit more, with Tesla being down a good chunk year to date. That's why it's down 12.3%. So the other thing, really quickly, I did end up selling out of my silver. It was, it's been trending around this $33, $34 mark. I did end up liquidating all 58 ounces of silver. I actually got a really good deal. Usually there's a premium when you buy and sell. When I sold, I got the fixed price of $31.78 per ounce. So I got a little bit over $1,800 for the silver. So that was actually a pretty good, if I had sold it back, during any other time over history here, I would not have got that. Maybe if I had got it back in 2008, but I didn't even have access to it back then. So yeah, out of the past nearly decade, this has been one of the premium times to buy it. And I think that's all I wanted to kind of talk about. I did have an article here on Bitcoin and how its recovery and kind of side trend now. So Bitcoin had hit a high of $110,000 per coin before plummeting to $10,000. There has been a leak revealing that Russia is kind of leaning into Bitcoin and crypto overall. Also, there's some speculation that the White House could be purchasing Bitcoin as a bit of, to stabilize that market. So here, Arthur Hayes has predicted the Federal Reserve is about to step in, stabilize the markets, potentially triggering a Bitcoin price boom. I'm not sure how much to believe these sort of articles. I just thought it'd be kind of an interesting one to kind of bring up because Bitcoin has actually come off their lows. I think it touched around 79,000. Not, breaking just slightly below that $80,000 threshold that it had done back at late February, touched 79,000, and then has appreciated around 5.8% off those recent lows. So I think that is going to be it for this video. I do expect Friday to be kind of, I was kind of thinking that this week would be kind of negative. Not positive, not positive, like, you know, hey, we're going to recover 1 to 3%, but I feel like we're still within that zero. I feel like on Friday, the S&P 500 will just kind of have moved in that week less than 1% to the upside or to the downside. I don't see a lot of volatility out there. I don't see a lot of news that have positively impacted the market or negatively impacted the market. There hasn't been a lot of tariff talk as well, as last week a lot of that was kind of buzzing around, kind of making the market really slosh. But I don't see a lot of that really taking place. Fed came out saying that nothing's changing. Job numbers came out and nothing's really changing there. They're kind of waiting. So yeah, I don't expect anything else to really take place. So we'll kind of see what takes place here on Friday. Let me know down in the comment section below. Where do you guys think the market will move next week? I don't see, you know, I'd like to get your guys' opinions on where you believe the market will move, whether it'll move to the upside or downside. I will be putting out a poll here on Saturday or Sunday, asking the question, hey, do you think the market will bounce higher, or do you think it'll stabilize and go sideways, or do you think we'll go lower on some negative news, right? So watch out for that. Definitely drop your votes. I would really appreciate that. And that is going to be it for this video. If I missed anything at all, drop me a comment down below. Say, hey, you know, this is something really important that took place this week that could be affecting the market coming up in the next week or the next few weeks. So definitely look into it. I always like to kind of have those little comments or emails to kind of get others' opinions on what could potentially be impacting the markets in the future. So that is going to be it from me. Do appreciate everyone tuning in. If you guys have any questions, again, drop them down below, and I will see you guys in the next video. Subscribe, give this video a thumbs up. Bye-bye.